In this video, the latest in our series on trading and technical analysis, we're going to start introducing the idea of using oscillators. Hello and welcome back to the latest video with me, David Jones, and Trading 212. This is the next step along in our charting and technical analysis series. Now, in recent weeks, we've been looking more at the graphical side, so support, resistance, trends, channels, all this sort of thing. So I thought this week we'll go off in a slightly different direction. We'll look at maybe the more technical side of market analysis and start looking at the idea of oscillators. These do prove very popular, but I think for the new trader, you can end up maybe going down the wrong path. I think one of the problems is that plenty of us in the beginning think there's some sort of holy grail. If we can just crack the right oscillator, then every trade's going to be a winner and our account is going to grow exponentially. Of course, there's no magic system, but oscillators definitely do have their uses. So in this video, we're going to introduce the overall concept of oscillators, and in the further videos to come, we'll look at specific examples and how to use them, such as the likes of the RSI. So to start off, what are oscillators? What do they look like? And what can they show us on the chart? Let's take a look at the theory. Let's start off with the basics. Here's our usual fictional market. Here in blue, so the market sells off a little bit, goes sideways, then rallies. Down here, we normally have the oscillators at the bottom of the chart, and typically, but not always, there'll be a couple of borders marked on the oscillator. So the 70% and then 30% down here. So for oscillators that read between 0 and 100% in value, anything above 70, the market is said to be overbought. It's maybe got a bit too stretched to the upside. Anything below 30%, the market typically is said to be oversold. So it's maybe gone too far down. So when we're looking at an oscillator, clearly it's going to follow the path of the market. Let's just plot one on this chart now. So when the market sells off, our oscillator will as well. And because oscillators are just calculations based on what the market's doing, broadly speaking, they'll end up following the overall path of the market. So we have a similar sort of shape. So up here, it's entering into overbought like it was down here, suggesting that maybe the market is due a dip. And then down here, we have the oversold signals. So a very simplistic approach. People will look to be buyers of the market when it dips below oversold, and sellers of the market when it dips above overbought. So there's a simple explanation of how oscillators work. As usual though, let's have a quick look at a real market to see how this translates into the real world. So we're on the platform, we're looking at pound US dollar, zero spread, daily chart here, so each candle represents a day's worth of trade. So we'll stick with that for now. When it comes to adding oscillators and indicators, we can do it here from the indicators tab. What I'm going to do, because this is an introductory start to the session on oscillators, let's stick with the most popular. So we're going to choose the relative strength index, the RSI. So we'll click on that. We can choose the period. I'm going to choose a 10-day RSI. We are going to cover this in a bit more detail in the next video, but just to get our view of what an oscillator looks like, there we have it. So we have our 70% line in there, the 30% line down here at the bottom, and you can see as the market here slides, then our oscillator, not surprisingly, slides. As the market rallies, then our oscillator rallies. And when we're here, overbought, it's a suggestion the market is going to run out of steam. And when we're here, we've got to go all the way back actually, down to here, is a suggestion that maybe the market has slipped far enough and we're due a bounce. So that's just simply looking at how these oscillators follow the market and these overbought or oversold bands. So oscillators probably are better known for the overbought, oversold angle, and that's a very simplistic way of interpreting. One of the downsides is in a strongly trending market, let's say a market is really running higher, like let's say the pound US dollar in recent days, the oscillator will go overbought very quickly, so we'll get you to try and go against the trend, which is far from ideal. But there's another way of using oscillators, not just overbought, oversold. So let's just take a quick look at that. It's not all about, though, just being overbought or oversold. We do get situations, which we're going to look at when we look at the RSI, where the oscillator is following the market, but then something slightly different happens. Like here, the market slips lower, but our oscillator may end up making a higher high. So this particular setup is known as divergence, because let's not forget, these things, they are just based on what the price is doing. It's a calculation based off the price. So if we do see a shift between what the oscillator is doing and what the market's doing, it can be a suggestion that maybe underneath what's going on within this overall downtrend, we are seeing a change in sentiment. You know, prices aren't dropping as quickly as they were, and that's where we get this divergence. So this is something that applies to many different oscillators, and we'll examine it in depth next time round when we look at the RSI. And here's a quick example on the pound US dollar daily chart of this idea of divergence. We've got to go back a bit in time, but we're going back to the 8th of June. So the market slips to a low. The RSI, not surprisingly, goes oversold. You can see it dipping down below that 30% mark oversold. Pound US dollar rallies, slips a little bit lower, but look what's happening here. There's our divergence. The RSI has made a higher low, so this can be a suggestion that maybe this weakness is running out of steam. So that's our high level view of oscillators. In the videos to come, we're going to look at a few different oscillators in a bit more detail and maybe find out which ones you think might be best for your own style of trading. But we'll start wrapping things up there as usual. If you have any questions or comments, just leave us a message in those comments down below. We do read all of them. If you like the video, click on the thumbs up. And to never miss out, this is part of a series. We do lots of videos throughout the week on other markets as well. But if you're not subscribed, if you click on the subscribe button there, and if you click the alarm bell notification thing down there, you'll get notified every time a new video gets uploaded. But for this week, from me, David Jones and Trading 212, we'll leave it there, and I hope you have a good trading week.